American Airlines reports record $14.4 billion Q2 revenue and strong AAdvantage growth. In a remarkable display of financial success, American Airlines has announced unprecedented revenue figures in its most recent earnings report, capturing the attention of industry analysts and travelers alike. The airline, headquartered in Fort Worth, Texas, revealed that it achieved a staggering revenue of over $14 billion during the second quarter, marking a significant milestone in its financial performance. Specifically, the company reported a net income of $628 million, excluding any special items, which is a testament to its robust operational efficiency. This impressive revenue figure translates to an operating margin of 8% for the quarter, and the airline boasts approximately $12 billion in total available liquidity, providing a solid financial cushion for future endeavors. American Airlines CEO Robert Isom expressed optimism about the company's trajectory, stating, "We remain confident that the actions we have taken over the past several years to refresh our fleet, manage costs, and strengthen our balance sheet position us well for the future." He emphasized that the strategic investments made to enhance revenue potential, such as improving the network, elevating customer experience, and expanding the loyalty program, are yielding positive results. Isom's remarks highlight a commitment to a long-term strategy that aims to sustain growth and profitability. The airline attributes its record revenues to a faster-than-expected recovery in leisure travel sales, alongside a continued strength in demand for premium cabin services, especially on long-haul flights. Notably, all of American's international operations reported year-over-year revenue growth, with transatlantic passenger flights increasing by 5%. This trend underscores a resurgence in global travel, which many had anticipated would take longer to materialize. Additionally, the AAdvantage loyalty program, which is a crucial component of American Airlines' customer retention strategy, has seen a 7% increase in accounts. Spending on co-branded credit cards associated with the program has also risen by 6%, indicating that customers are not only engaging with the airline, but are also investing more in their travel experiences. But here's where it gets controversial. While these figures paint a picture of success, some industry experts question whether this growth is sustainable in the long term, especially in light of fluctuating fuel prices and potential economic downturns. What do you think? Are these record revenues a sign of a thriving airline, or are they merely a temporary spike in a volatile market? We invite you to share your thoughts and engage in the discussion. American Airlines shocking forecast. Economic uncertainty sparks 9% stock drop. Warning signs are flashing for American Airlines, and the stakes have never been higher. The company's latest forecast reveals just how much economic turbulence is rattling the airline industry, and not everyone is feeling the same headwinds. So what's going on behind the scenes? Let's break it down. American Airlines is bracing for a wide range of possible financial outcomes this year, and here's why. The unpredictable U.S. economy is shaking up travel habits, especially for travelers within the country. In an announcement on July 24th, the company revealed an unusually broad estimate for its 2025 adjusted earnings. Depending on how the year unfolds, American could swing from a loss of 20 cents per share to a profit of 80 cents per share. The midpoint, 30 cents per share, lands well below the average analyst forecast of 61 cents. But here's where it gets controversial. Some of American's largest competitors are painting a much rosier picture. Delta, United, and Alaska Air have all signaled confidence with their own forecasts, highlighting stronger passenger demand and better pricing. So why is American seeing things so differently? Does it suggest deeper issues with its strategy or network? That's up for debate. CEO Robert Isom didn't sugarcoat the challenges. He told analysts the domestic network has been under stress because of uncertainty in the economy and the reluctance of domestic passengers to get in the game. This means people are holding back on booking trips within the U.S., a big deal for American, since over 2/3 of its revenue comes from domestic flights. No surprise then that the market reacted negatively. The airline's shares tumbled more than 9% in morning trading, reflecting fears that these challenges could persist. Let's get more specific. While American is hoping things improve in August and September, July has been rough. Bookings dipped noticeably, which Isom admitted could make July the lowest point of the quarter. Even heading into fall, the company expects the revenue it makes from each domestic seat, the all-important unit revenue metric, to remain lower than last year. To make matters worse, its non-fuel operating costs are projected to climb as much as 4.5% in the third quarter. Looking at the numbers, American now anticipates an adjusted loss of 10 to 60 cents per share in the third quarter alone. That's far worse than the 7-cent loss most analysts were expecting. And this is the part most people miss. American's issues aren't happening in a vacuum. Most U.S. airlines pulled their forecasts back in April, following escalated trade tensions and economic uncertainties, a situation that some experts compare to industry shockwaves of COVID-19. While rivals are regaining confidence, American is still clearly nervous about how tariffs and economic twists might hit travelers' wallets. The underlying problem? Many Americans are still cautious about spending, especially those looking for budget-friendly travel deals. This has been particularly painful for airlines that focus mostly on U.S. domestic routes, like American and Southwest. Even in peak summer season, when airlines usually rake in their highest profits, carriers are struggling to fill basic economy seats and are being forced to lower fares as a result. Just look at Southwest Airlines, whose recent earnings were hit by sluggish demand in the very market they dominate. For American specifically, the second quarter's domestic segment was the weakest. Unit revenue fell 6.4% from last year's levels. The good news? International operations, particularly across the Atlantic, saw a boost, with unit revenue rising 5% year over year. Not all the news was gloomy. For the quarter ending June 30th, American managed an adjusted profit of 95 cents per share, outperforming analyst expectations of 78 cents. But with so many variables in play, from economic jitters to unpredictable tariffs and shifting consumer moods, the future remains anything but clear. Here's a question short of third debate. Is American Airlines being overly cautious, or its competitors overlooking real risks? Do you think the challenges faced by the domestic travel market are temporary, or do they signal a deeper shift in American consumer behavior? Let's hear your odds below. Do you side with Americans' realism, or with the optimism of Delta, United, and Alaska Air?